Hi everyone, welcome to our presentation. We are the group number 6 and today we are going to discuss about Cineplex financial analysis. Welcome. Executive summary. Well, the first thing that we need to mention is this analysis is based on the information from 2020 to 23 years. Also, it includes these three statements. The first is the income statement, the second one is balance sheet, and the third one is cash flow. Also, during this presentation, we are going to make a comparison to IMAX, that is a competitor, into the same industry. Then we are going to analyze the financial ratios. So, in because we want to understand a little bit better regarding to solvency, profitability, liquidity, and efficiency. Another point is like we want to understand and make another comparison between Cineplex and the average of the industry, and that information comes from CSA market. And finally, we are going to close this presentation making some conclusions and also making some recommendations. Answering the question is, well, is or not a good idea to invest in Cineplex? Is or not a good idea to invest in IMAX? Financial radio analysis. As a team, the first thing that we decided to do is to make an horizontal and vertical analysis with the statements. So, based on that, we want to understand what is the variation between years, and also we wanted to understand what are the percentages, and also we clearly understand what was going on with revenues, expenses, and if the company is generating profit or loss. And we did the same thing with IMAX. So also we can understand some trends regarding the assets, liabilities, and equity. And finally, we analyze the cash flow operations, understanding if they have enough money to support their operations, and also what they are doing with the equity. And finally, we calculate the financial ratios to understand what is the behavior between Cineplex and IMAX. Also, we compare these ratios with the average of the entertainment industry. Revenue versus expenses analysis. During 2020, the industry of entertainment had hard times. However, Cineplex has been growing. Especially, Cineplex revenue growth from 2020 to 23 in 232%. Also, total expenses and operating expenses have been growing. As a result, they have a positive profit. And IMAX revenue also has grown in 174%. These situations reveals that the behavior of Cineplex has higher cost but strong revenue growth.
Good evening, Professor, and good evening, everyone. My name is Sarmila Kumari Kesi, and today I would like to go with the topic assets, liability, and equity trends. In Cineplex recovery effort post COVID 19, Cineplex is regaining financial strength with increased revenue and cost optimizations, and in equity impact on shareholders. As Cineplex improves, investor confidence rises, leading to potential stock value growth, and in IMAX continuing losses versus Cineplex recovery. Cineplex is recovering better while IMAX continues to struggle financially. And in debt strategies, Cineplex increased short-term debt to the strengthen its market position, whereas IMAX reduced short-term debt but still faces financial difficulties. Cash flow analysis. In operating cash flow, it increased 297% due to higher revenue and improved operations. And in investment cash flow, it shows negative in 2022 to 2023 due to spending on assets, signaling long term growth plans. And in financial cash flow, it shows negative as Cineplex focuses on paying off debt. And in IMAX comparison, it also shows similar trends but with more financial stability. Financial ratio overview. In net profit margin, Cineflex has moved from negative margins in 2020 to profitability in 2023. And in return on equity, Cineflex improving return on equity indicates better shareholder returns, while IMAX return on equity is declining. And in quick ratio, it measures Cineflex's ability to cover short-term debts using its most liquid assets, whereas in assets turnover ratio, it shows how efficiently Cineplex uses its assets to generate revenue. Whereas in interest coverage ratio, Cineplex is improving its ability to meet interest payments, reducing financial risks. Analysis of net profit margin. Cineplex turnaround went from negative 2020 to positive 2023 net profit margin, whereas IMAX versus Cineplex, both companies now have similar net profit margins, suggesting Cineplex has caught up in profitability. An industry benchmark, the average net profit margin is minus 10.89%. That means Cineplex is performing better than the industry. Return on equity analysis. Cineplex ROE improvement. Cineplex ROE is increasing, meaning it is generating higher returns for shareholders and using its capital more effectively. This is a positive sign for investors. In IMAX ROE decline, in contrast, IMAX ROE is decreasing, which means it is becoming less efficient at generating profits from shareholder investments. Whereas Cineplex post pandemic recovery, the company has made significant progress in overcoming the financial losses caused by the pandemic. With a stronger financial position, improved profitability, and a focus on debt reduction, Cineplex is on a steady path toward long term growth. Thank you.
Hello, Professor, and hello, everyone. My name is Rashmi Paudel, and I'm from Group 6. And today I'm going to explain about the quick ratio and if its positioning of liquidity of Cineplex company and its competitors IMX company. First of all, the quick ratio of the Cineplex has improved from zero point 0.6 to 0.51. However, since it is less than 1, the company continues to face liquidity constraint. The company face its liquidity constraint, and for the IMX company, the quick ratio of IMX is more than 1 or is above 1, which means it is good liquidity and it can meet its short-term financial goals and obligation, and its industry average is 0.47, which means Cineplex is improving but has a weaker liquidity as compared to its industry's standards, or compares to its competitor company IMX. In conclusion, Cineplex has made a progress in improving its liquidity but still faces challenges in meeting short-term obligation effectively. Thank you. Now I'm going for the next slide. In these slides, I'm going to explain about the asset turnover ratio of both the companies and its competitor company. First one, the asset turnover ratio means how efficiently a company uses assets to generate their revenue. For the Cineplex company has shown more improvement in its asset turnover ratio as compared to its competitor company IMX. It's indicate that the company is utilizing its assets more effectively over time. Their industry average is 0.17, which is lower than the asset turnover ratio of both the Cineplex and the IMAX company as compared to their industry average ratio. For conclusion, since both Cineplex and IMAX has higher asset turnover ratio than the industry average, they are more efficient in using their assets compared to their other companies in the same industry. Thank you. Now moving for the next slide. Now I'm going to discuss about interest coverage ratio. In 2020, Cineplex has a negative interest ratio, which means it was unable to cover its interest expenses from its earning. But by the year 2023, it improves to 0.96, showing that the progress, but still not up to the mark or still remaining the weak. For its competitor company IMX, has an interest coverage ratio of 7.78. It has a better solvency, which indicate a strong financial health and the strong ability to easily meet its interest obligations. And their industry average for the coverage ratio is 2.85. For the 2.85, meaning that the Cineplex is still below the standards, while IMX is performing well above it. In conclusion, although Cinemax has improved its ability to cover its interest expenses, it's still financially weak compared to both its industry company and compared to its Amex company. Now, I would like to call Prajwal for explaining the other slides. Thank you.
Hello, good evening everyone, including instructor Tara. Myself Pranjal Bhusekar with student ID 2404483. I am here to present my part of the video presentation. So coming to the investment recommendations, when we compare financial statements of IMAX and Cineplex, according to me and the team conclusion is a safer investment option is IMAX due to its excellent solvency, good liquidity, and low risk. When we compare both the financial statements of Cineplex and IMAX, while on the other hand, Cineplex has a lot of potential to grow, but its financial stability must be improved. So, when we compare a short term and long term, for short term, short investing is in IMAX is safer in the short term, while Cineplex strategy may yield more profits in the long term. Now, going to the next slide. Coming to the conclusion, when we compare financial statements of Cineplex and IMAX corporations, here is the conclusion in terms of Cineplex. Cineplex is stronger than IMAX in terms of financial performance, but needs stronger liquidity and solvency. On the other hand, IMAX is stronger than Cineplex in liquidity and debt payment. So, for short term, currently IMAX we recommend for lower risk investment, while Cineplex is a recovery investment with high potential. Both are having positives and negatives, but where if you want to invest in short term or in long term, it is our conclusion that IMAX for short term and Cineplex for long term. Moving ahead to the next slide of references. So here we come to the end of our presentation. At the end, we would like to give the references used in this presentation. The references are taken from CSI Market of 2024, Movies and Entertainment Industry, Financial Strength Information retrieved from CSI Market. And the second reference is Jerry W. and Kimmel P. from 2024, Financial Accounting and Accounting for Managers, John Wiley and Sons Incorporation. Myself, Pranjal Bhusekar, along with my team members Rashmi Paudel, David, and Sharmila Kumari, say thank you so much for watching our presentation. Thank you.